Hello, today is March 14th, 2024. Just want to make a quick video of 4 stocks to buy this up and coming week that should take advantage of while the market's still at these prices. You know, we've pretty much found support where we're at right now. Today's the first day that we've actually seen a rebound in stocks. You know, just looking at the market, we've got Tesla up 4%, NVDA up 4.6%, Eli Lilly's up 1.12%. You know, just go down, whole market as a whole is actually green today. The first company I would buy is NVDA. Anytime this stock has a down day, you know, I would buy in. As everyone knows, it's my #1 company and it's my most recommended choice, whether you're a beginner at stocks or a long-term investor. You know, you can't go wrong owning the best company in the world. You know, today it's actually trading at $120 a share, and it's actually up to $121 at the moment. It's still climbing higher. Wouldn't advise buying it right here while it's up 4% today, but when it has this first red day, definitely start buying back in. Dollar cost averaging NVIDIA is always a winning philosophy. Then we've got the next company, Eli Lilly, ticker symbol LLY, my #2 company. You know, just looking at its financials, its P is 69.18 with a forward P of 35.59, and its earnings per share is $11.71 with a dividend yield of 0.74%. You know, Eli Lilly really, you know, the stock's not really climbed a whole lot in the past year. You know, actually trading down at $810. It's at a bargain price. Great long-term investment. You know, it helped me make 140% return on my investment. It was the #1 stock in my portfolio on my last tax return. Then we've got next company that you really got to own in this market. You know, I'd have to say, you know, PLTR Technology. You know, I bought in earlier this week at $80 a share. If you know, it's currently trading up 87.16 today. It's up 8%, so it just surged back in price. You know, this stock was trading at over $120 a share, you know, right before the market correction. So you know, we got to take advantage of buying, you know, PLTR while it's had this kind of pullback in price. You cannot miss this type of opportunity. Let's take a look at this financials real quick. You've got you know, it's just crazy how much this stock's gained in the past year. You know, I actually had this on my watch list back in July when it was trading at $25 a share. You know, that the stock has just went parabolic since then, and should continue to go up in price for probably the remainder of 2025 without any real setbacks. Its P's 461.77 with a forward P of 280.94, so tons of growth still right there. Its earnings per share is 18 cents. So this stock should continue to climb all the way up until earnings on May 5th. I've got a strong buy PLTR. Every time it falls 5%, I would buy this company. You know, this company is very volatile, so you know, I would just wait till it falls 5% and then load up on it. Wait till it goes up 5%, take profits, then repeat the process. Can't really go wrong. And you know, next company I've got probably a safer choice. I've got Apple, ticker symbol AAPL. It's currently trading at $213.38 a share. At these prices, you can't go wrong long term with Apple. Its P is 33.92 with a forward P of 29.11. So we're not going to see a ton of growth, but overall, I expect Apple to steadily climb higher. You know, we could see an easy, 20 to 40% gain in the next 12 months with Apple. Its 52-week high was $259.81. It should easily get back to there by December, if not sooner. I mean, we've got 2 rate cuts expected this year, and generally, I always suggest picking stocks like NVDA that have a ton of room to go higher and have a lot of volatility, and but basically, if you want to diversify your portfolio and you're more conservative, Apple's a great choice. Its dividend yield's 0.47%, so it's paying $1 a share. You can't really go wrong owning Apple. It should be a staple of anybody's long-term portfolio, and year in, year out is a big winner for me. Now I'm gonna have a few bonus stocks in here, because of the market correction. I personally am switching to just large cap companies. Occasionally I'll day trade Palantir Technology. That's probably the one exception to the rule that I would own long term that's small caps. But I always favor companies with moats. It really doesn't matter what's going on in the market. The tariff news has caused the whole market to. Basically, we've got Tesla rebounding nicely, up 3.82%. NVDA coming up 4% today. You always want to take advantage of the volatility, but the number one rule in investment is never, you never want to lose money. Always protect your principal. And we've got, Carvana, which is up 7%. As much as I like that company, I would stay away from Carvana just because it's not a large enough company. These companies with moats should see the same gains that they seen under the first President Trump's first 4 years were, amazing for the largest companies in the world, and I think we'll see basically the same thing repeat itself as Trump, gets settled into office. He took advantage of the market being at all-time highs. So if you're going to do tariffs, it was done at the right time. So and we should see the market bounce back nicely. We had inflation news reported this week. Inflation actually dropped this past month, so that's excellent news. We should have a continue to see a bull run in 2025. So dollar cost averaging, NVIDIA, Eli Lilly, Apple, easy companies to choose from. But here's a few bonus companies we'll go over. We've got Apple, that we already talked about. Let's go Amazon real quick. Amazon actually seen a pretty substantial drop. Kind of surprised that it actually fell under $200. It's currently trading at $197.77 a share. It's up 2%. Long term, Apple and Amazon kind of mirror each other as far as performance. I like Apple slightly better than Amazon, but just looking at Amazon's financials real quick, its P is 35.78 with a forward P of 31.24 with an earnings per share of $5.53. The only real difference there is Apple pays a dividend and Amazon does not. Amazon's 52-week high was $242.52. So expect Amazon to bounce back nicely. It's only up 2% today, which in contrast to NVDA, which is actually up 4%. So you're not going to see as much fluctuation in price with Amazon. But if you want to diversify your portfolio, definitely a stock to keep an eye on. Definitely, if your stocks are down, continue to dollar cost average. These are where you're going to see the largest gains at. It's when the market's down. They're the same companies that they were 3 months ago. You're just getting them at better prices. That's why I always love buying companies with large moats. These are easy companies, and you can easily double your money on in the next 12 months. So continue dollar cost average, and you'll be reaping the benefits before you know it. Appreciate everyone watching this video. Please hit the like and follow. We're trying to get this account monetized. Also check me out on TikTok Live between 7:30 and 8:30 a.m. Eastern, Monday through Friday. Also, all my trade signals are totally free on Twitter. Just search Josh Delosier. Also on Instagram. So check it out if you get a chance. I'll make another video next week. Hope everyone has a very happy St. Patrick's Day this up and coming Monday. So have a great weekend. Have fun. I'll see you all next week.